Let me ask you something. Do you know your credit score right now? Not approximately. The exact number, most people don't. And that's a problem. Because your credit score is quietly affecting your life in ways you probably don't even realize. It affects whether you get approved for an apartment, whether you qualify for a car loan, what interest rate you pay on your mortgage, even whether some employers will hire you. A good credit score can save you tens of thousands of dollars over your lifetime. A bad one can cost you just as much, and the crazy part? Most people have no idea how it actually works. Nobody teaches you this in school. You're just expected to figure it out. Today, we're fixing that. By the end of this video you'll know exactly what your credit score is, how it's calculated, what's hurting it, and exactly how to build or fix it as fast as possible. Let's go. So what actually is a credit score? A credit score is a number between 300 and 850 that represents how trustworthy you are as a borrower. The higher the number, the more lenders trust you to pay back what you owe. Think of it like a financial report card. Every time you borrow money and pay it back, you get a good grade. Every time you miss a payment or max out a credit card, you get a bad grade. Your credit score is the average of all those grades over time. The most common scoring model is called FICO. And here's how the ranges break down: 300 to 579, poor. You'll struggle to get approved for anything. And if you do, the interest rates will be brutal: 580 to 669, fair. You can get some approvals but you're paying higher rates than you should: 670 to 739, good. You're in solid territory. Most lenders will work with you: 740 to 799, very good. You're getting competitive rates on almost everything: 800 to 850, exceptional. You're getting the best rates available. Lenders compete for your business. The goal? Get above 740 as fast as possible. That's where the real financial benefits kick in. Now let's talk about how your credit score is actually calculated. Because once you understand this, everything else makes sense. There are 5 factors. Each one has a different weight. Factor 1, payment history. 35%, this is the biggest factor by far. Do you pay your bills on time? Every single time, one missed payment can drop your score by 50 to 100 points overnight. And it stays on your record for 7 years. The fix is simple: never miss a payment. Set up autopay for at least the minimum on every account. Even if you can only afford the minimum, pay it on time. Every time. Factor 2, credit utilization. 30%, this is how much of your available credit you're using. If you have a $10,000 credit limit and you're carrying a $3,000 balance, your utilization is 30%. The rule of thumb is keep it below 30%. The best scores keep it below 10%. High utilization tells lenders you're stretched thin. Even if you pay on time, high utilization hurts your score significantly. Factor 3, length of credit history. 15%, how long have you had credit? The longer, the better. This is why you should never close your oldest credit card. Even if you don't use it anymore, closing an old card shortens your average credit age, which hurts your score. Factor 4, credit mix. 10%, lenders like to see that you can handle different types of credit. Credit cards, auto loans, student loans. A mix shows you're a reliable borrower across different situations. You don't need to go out and get new debt just for this. But it's good to understand why having different types of accounts can help. Factor 5, new credit. 10%, every time you apply for new credit, a hard inquiry appears on your report. This temporarily drops your score by 5 to 10 points. Don't apply for multiple credit cards or loans in a short period. Space them out. Now let's talk about the things that are silently destroying your credit score right now. Credit killer 1, late payments. This is the #1 score killer. Even one payment that's 30 days late can drop your score dramatically. And it stays on your report for 7 years. Solution, autopay. Set it up today. For every account, Credit Killer 2, high utilization, using more than 30% of your credit limit is a red flag to lenders. Even if you pay your balance in full every month, if your statement closes with a high balance, that's what gets reported. Solution: pay down your balances before the statement closing date. Or ask for a credit limit increase. Credit Killer 3, closing old accounts. It feels logical: close the cards you don't use. But this is a mistake. Closing old accounts reduces your available credit and shortens your credit history. Both hurt your score. Solution: keep old accounts open. Put a small recurring charge on them and set up autopay. Just keep them active. Credit Killer 4, too many hard inquiries. Shopping for credit cards or loans triggers hard inquiries. Each one drops your score a few points. Solution: only apply for credit when you actually need it. And do your rate shopping within a short window. Multiple mortgage or auto loan inquiries in 14 to 45 days count as one inquiry. Credit Killer 5, collections and charge-offs. If you have unpaid debt that's gone to collections, this is devastating to your score. A collection account can drop your score by 100 points or more. Solution: if you have collections, negotiate a pay for delete, where the collector agrees to remove the account from your report in exchange for payment. Okay. Now the part everyone actually wants: how to improve your score as quickly as possible. Step 1. Check your credit report for errors. 1 in 5 credit reports contains an error. Wrong account. Incorrect balance. Account that doesn't belong to you. You're entitled to a free credit report from all 3 bureaus every year at annualcreditreport.com. Check all 3. If you find an error, dispute it. Errors getting removed can boost your score dramatically and quickly. Step 2. Pay down high utilization first. If your utilization is above 30%, paying it down is the fastest way to see a score increase. Unlike late payments, utilization improvements show up on your score within 1 to 2 months. Pay down the card closest to its limit first. Then move to the next one. Step 3. Become an authorized user. Ask a family member or trusted friend with good credit to add you as an authorized user on their credit card. You don't even need to use the card. Their positive history gets added to your report. This can boost a thin credit file significantly, sometimes by 50 points or more. Step 4. Get a secured credit card. If you're starting from zero, a secured credit card is the fastest way to build credit. You deposit money as collateral, say $500, and that becomes your credit limit. Use it for small purchases. Pay it off in full every month. After 6 to 12 months, your score will start moving. Step 5. Never miss a payment. Ever. Set up autopay on every single account. Even if it's just the minimum. A perfect payment history is the single most powerful thing you can do for your credit score long term. Before we wrap up, let me bust some common credit score myths that are costing people points. Myth 1. Checking your own credit hurts your score. False. Checking your own credit is a soft inquiry. It has zero impact on your score. Check it as often as you want. Myth 2. You need to carry a balance to build credit. False. This is one of the most expensive myths out there. Carrying a balance means paying interest. You get zero credit score benefit from it. Pay your balance in full every month. Myth 3. Closing a credit card improves your score. False. As we covered, closing a card hurts your score. Keep old accounts open. Myth 4. Income affects your credit score. False. Your income is not a factor in your credit score. A low-income person with perfect payment history can have an 800 score. Myth 5. You only have one credit score. False. You have multiple scores. FICO 8, FICO 9, Vantage score. Different lenders use different models. The numbers will be slightly different. Focus on the principles, not the exact number. Let's bring it all together. Your credit score is a number between 300 and 850. Get it above 740 and you unlock the best financial terms available. It's calculated based on 5 factors: payment history, utilization, credit age, credit mix, and new credit, the fastest ways to improve it: fix errors on your report, pay down utilization, set up autopay, and become an authorized user, and avoid the killers: late payments, high utilization, closing old accounts, and too many hard inquiries. Your credit score is one of the most powerful financial tools you have. Take care of it. If this video helped you, subscribe. Every week I break down personal finance in a way that actually makes sense. See you in the next one.